Good morning, all. So today we'll start with Affordable Care Act and Premium Tax Credit, which is Unit 14, ACA. We also call it as ACA, which is Affordable Care Act. So before understanding this Affordable Care Act, so this is kind of health insurance. So government is focusing on, so right now, okay, but before 2010 around, so there was huge problem in the USA. So because of the recession and because of health insurance problems, so usually uh, the historical reason for this Affordable Care Act is, after World War II, so most of the Americans receive health insurance through their employers. So majority of the people majority of the people do get the insurance from their employers. This was the case, which is after World War II. So this worked for many years. So this was going good. And second problem, so here the problem is, over the time what happened, many people become self-employed people. So they were getting the insurance from the employers, but many people become became self-employed people. So in that case, what will happen? So they may lose the insurance here. So majority of the cases, employees was providing, but if they become self-employed people, then they will lose the interest. So this was the case. Or some employers, what happened? Some employers stopped health coverage. So this was another thing. And also, part-time workers usually will not get any benefits. So employees part-time employees cases, no health insurance. So this was one case. And another case, medical cost increased huge, like in US, Indian medical cost little bit different compared to US medical cost. So medical cost increased dramatically. So much medical cost. And families even so to pay the insurance also, it becomes double triple over the time. Medical people middle class people may not be able to pay their premiums. So and also and also serious illness cases, it will create so much debt because the expense medical cost is huge. Medical cost is very expensive in the USA. And also, if any person is having some pre-existing medical conditions problem, then they may not be eligible for insurance, even though they are having insurance. But the insurance guys may not be able to provide the whole of the claim. So some amount will goes to unclaimed insurance. So the balance, the people the whoever is taking insurance, so they need to pay from their own pockets. So let's say cancer survivors or diabetics or any heart disease patients, so they need to pay from out of their pocket, even though they're having insurance, but they're having some pre-existing conditions. So in that case, this is the problem. And also and also these are the cases. So these are the things before 2010 around. And also, exactly at 2008, majority of the so that was the great recession at 2007 to 2009. So millions of the people lost their job. So at 2008 around, millions of people lost their jobs because of the recession. And also, if people lose their job, then what will happen? So majority of the people are getting through the health insurance, getting through the employer, right? So if they are losing job, then what will happen? So they also will lose the health insurance. And families struggles to pay the medical care because they don't have jobs and they are unable to pay the medical bills, and also they are unable to pay the insurance amount as well. So this was the biggest problem at 2007 to 2009. So this is not only case where 2007 to 2009. So this was the case going on from 1940s around. So this was the biggest problem in the USA. Then they saw this issue at 2008 because of the Great Recession. Now there is a person. So the person called Obama. Obama becomes the president at 2008 around. So he introduced there is one medical insurance, benefit to the people who are unable to pay the insurance. So this was the case. So now this act, so we the act name is Affordable Care Act, right? So this we also call it as Obama Obama Care Act. Obama Care Act. Because he was the one who introduced this, you know, uh, Affordable Care Act. So this was the reason, this was the historical background of the Affordable Care Act. Now we'll talk about ACA and premium tax credit, how this, what is the link for this care, healthcare, and with the income tax. We will see one by one. So let's say, uh, so the goal of the Affordable Care Act, this is a separate act. So they drafted. So at the time of Obama, they had drafted this act. So under ACA, which is an act, Affordable Care Act, under this, the goal is simple. They want more people to have health insurance, but so many people cannot afford, right? So that's the reason ACA come into picture, and they are trying to give the health insurance benefits to everyone in the USA. So that is their goal of the ACA Act. So let's say the problem is insurance premium around, like, let's say per month $800, guys, and the person income per annum per year around $35,000. So $35,000. So can he pay the insurance amount? So which is kind of huge amount, right? So they may not be able to pay. So in that case, what is the solution? So someone should help them to pay the insurance amount, right? So in that case, government came into picture, and the government says, okay, so you are unable to pay the insurance, fine. So the government will help to pay part of the premium. So 800 here they are supposed to pay. So the government will assess them, and the government will pay some amount. So this payment we call it as premium tax credit. So so government subsidy here, the government will give some amount. So the amount we call it as premium tax credit. Because why we call this as credit? So we call this as premium tax credit. So why to call this as premium tax credit? Because the government handles, so the IRS handles this, handles the credit. So that's the reason we call it as credit, which is premium tax credit. So for this eligibility is based on, so to get this health insurance subsidy, so let's say here the government will give $400 per month towards the health insurance. So the government is giving some subsidy, right? So here this handles through the IRS, because this credit is based on few factors, which are, this is based on the income. So this is based on the income, and IRS is the government. IRS is the agency where they can identify income directly. So that's the reason this credit is being given through the IRS. So they will check the, so this is based on the income. So that's the reason IRS will verify the income, and credit will be given to the tax payers. So in this case, who handles this credit, guys? So IRS will handles the premium tax credit. So how this will work? So we will see. And also this insurance, we call it as health insurance at marketplace. Health insurance at marketplace. So health insurance at marketplace. So what exactly it means? So health insurance is at marketplace, which is kind of online insurance shopping mall. So which is online insurance, which is shopping mall. So there is one website which is healthcare.gov. So taxpayer can go to the website and he can check the health insurances and he can buy the insurance from the healthcare.gov. So let me open the website for you. Just a second. Yeah. Here you go. So this is healthcare.gov. So here this is a place where taxpayer need to give some basic details and then they can get some best insurance policy. Like let's say the person is residing in California and so they must create an account and then they have to give their basic details like SSN and their income and so some other details they need to give. So based on this, it will show some plans. So based on the plan, he can purchase the plan and he can get insured because insurance is the one of the biggest problem, right? So because in USA, which is very expensive, so medical bills are if they admitted in the hospital, then they need to pay so much, so much for medical expenses. So that's the reason. So everyone, the government intervention is one thing. So everyone should come under the insurance. So then insurance companies will reimburse the amount, right? So this is kind of marketplace where they can purchase through the through this plan. And now, so we understood few terminologies. So one thing is Affordable Care Act, which is ACA, and also we have seen premium tax credit, and also we have seen health insurance at marketplace, and we have one more word called advance premium tax credit. Advance premium tax credit. So in the previous one, so here let's say per month $800 they are supposed to pay insurance. So government will give $400 per month, which is $400 insurance per month, which is total total 12 months into 400, which is 4,800. They will get when they will get. So based on the if they usually will get at the time of filing their tax return. This 4,800 they will get at the time of filing the tax return. So when they're filing their tax return, they will get one form which is health insurance at marketplace, which is 1095A form they will get, and this will calculate the eligibility of premium tax credit at the time of filing. They will get 4,800. So based on the income, so many factors we have. We will see one by one. So this premium tax credit usually we will get at the time of filing the tax return. Now we have the problem is here, if we can observe this problem, which means he need to pay every month from his pocket every month $800 he need to pay. So maybe he may not be able to pay this 800 every month. So because when he will get the government subsidy, so he will get at the time of filing of the tax return, which is almost after a year. So after a year only he will get this insurance, this premium tax credit. But taxpayer would like to take insurance, but he may not be able to afford $800 on monthly basis. So in that case, what will happen? So again, government have one more option. At the time of insurance itself, the government will give the subsidy directly to the insurance companies. So in this case, we call it as advance premium tax credit. So advance premium tax credit is the credit where the government will give the amount directly to the insurance companies. Like let's say uh, like without APTC, which is advanced premium tax credit. So we forget about we don't have any advanced premium tax credit. So how this will work, we'll see. So let's say John premium $800 per month. $800 per month. So government credit is this is premium. So premium means the insurance cost. So insurance cost per month is $800 and the government subsidy, the government credit is $500 per month. So this person need to wait to get this $500 per month. He need to wait for next year. So next year means at the time of filing the tax return, then only he will get this amount of $500 per month. So like let's say this is 2025. This is 2025. So he need to wait to get this government credit. He need to wait till 2026, till 2026 April 15. So when he filed the tax return, then only he will get this $500 per month as a credit. So this was the problem, right? Because he need to wait for next tax season and he may not be able to pay $800 per month. So many people cannot afford that. So the subsidy would arrive too late. So that's the reason the government come up with solution, which is the solution is instead of waiting until next year, the government will send the credit now. So how this will work? So premium 800, the government credit 500, and in this case this is monthly basis this will work. So this taxpayer can pay only 800, only $300 towards the health insurance to the so in this case the premium amount after APTC, he need to pay premium of only 300. So before APTC, he need to pay $800 to the health insurance. So after APTC, he need to pay only 300. So this government credit we have, right? So the government itself will pay on monthly basis to the insurance directly. So in this case, this is advantage, right? So with this advance premium tax credit, which is APTC. How this will work? I told you. So the APTC, this entire premium tax credit is based on the income. So that's the reason IRS handles this. So this is based on the income. So at the time of filing the tax return, they can assess the income. So premium tax credit simply. So when we will get the premium tax credit? So at the time of filing, IRS will calculate the income and based on that, they will give the credit. But here we are talking about APTC. So before the year only, we need to calculate the income. So the income we call it as estimated income. So here is the problem. If it is estimated and actuals may be differ, right? Estimated income and actual income, there may be possibility for difference in the estimated income and actual income. So the entire premium, the intention of this credit is, so before that, you need to understand one more important point. So the entire Affordable Care Act, which is premium tax credit, is based on, this is based on, income. So this is based on the income. So income cases, we have a poverty line. So based on the poverty line, people, so the IRS will decide who are eligible and who are not eligible. So poverty line. So there is some every year the poverty line will some amounts will be there. You need to remember the poverty line incomes, but you need to understand what is the poverty line. So poverty line below people may not be able to afford their basic needs. Poverty line to the above, they can able to manage their basic needs. So here poverty line less than 100 percentage and poverty line more than 100 and more than 200 and more than 300 and more than 400. So these are different categories of poverty line. So less than 100% of the poverty line cases, the government itself will have, they have a separate insurance, so which is Medicaid insurance. So for this less than 100% of the poverty line cases, the government have their own insurance. So government insurance. So government will pay their, government will take care about the insurance. So Affordable Care Act. Why again Affordable Care Act? So there is no Affordable Care Act for the people who is having less than 100% of the poverty line income. Like let's say poverty line, for example, $10,000. So in that case, taxpayer income 9,000. So will he eligible for Affordable Care Act? No, because the person income less than poverty line, so government separate policy we have, so separate insurance they have. So based that for the people who is having less than 100%, so they can get the insurance directly from the government. So there is no chance for Affordable Care Act, because this the provision, the intention of this Affordable Care Act is only for the people who is having income above the poverty line and below the high income people, because below the poverty line government will take care, and above the 400%, so they are high income people. So high income people cases, they can pay their insurance directly. So government no need to take care about these people. The problem here is the people having mid-level income. So less than 100% poverty line, government will pay. More than 400%, they can taxpayer can themselves pay the premiums. But problem here is with the middle class people. So mid majority of the people in the USA are middle class people. So in that case, who will take care? The government will take care by this provision of Affordable Care Act. So that's the reason we need to understand these poverty lines and the percentages. So here APTC. So premium tax credit, this is simplified. So at the time of filing the tax return, we can calculate the income, and based on the calculation, so we can see whether taxpayer income falls under which category. So based on that, eligibility will be calculated. But APTC, which is advanced premium tax credit, for that we need to give the estimated income. So whenever there is estimation, actual amount also will, so there will be change in estimated income and actual income. So here is the problem. Guys, getting these points?
Sir.
Yes, right? So what will happen at tax time? So here we will see some rough numbers. So let's say uh, taxpayer don't want to take this premium tax rate. So we have the option. Either we can go with premium tax rate or we can go with APTC. So premium tax rate means we need to wait for next tax year, and at the time of filing, we can calculate the income, and the premium tax credit will be given at the time of prepare filing the tax return. But APTC, do we need to wait till filing the tax return? No. We can get the advance premium tax rate from the government directly based on estimated income. APTC based on what, guys? APTC based on actual income, and advance premium tax based on estimated income. So whenever there is estimation, there may be possibility for differ of actual income. So there may be possibility for difference in actual income and estimated income. So in that case, the premium tax rate amounts will differ. So let's say there is a taxpayer. So he estimated income of the taxpayer, which is around 40,000. 40,000. But when it is coming to actual income is around $55,000. So is there any problem in this? Yes, definitely this is a problem, because the income increased, taxpayer qualified for, so for $400, for $40,000, he was eligible for around $400 credit. He took the APTC, and he took the APTC and he estimated the income. But when it is coming to actual income, which is income increased, so we know the APT the credit, the entire credit is based on the poverty line. So less than 100%, so government insurance will be there. So they are not eligible for the premium tax rate. And again, 100%, 200%, 300, so more than 400, high income people. So we know some basic understanding of this incomes, right? So here in this case, he will be eligible for less credit. Let's say for $55,000, he is eligible for 300, but he already took the subsidy from the government 400. Now here what will happen? So this we taxpayer already received advanced premium tax rate, but this is actual eligible premium tax credit. In this case, what will happen? So he need to repay the difference amount now. So he need to repay the $100 at the time of filing the tax return. So this we call it as excess APTC, excess APTC, right? How to calculate excess APTC? So APTC we can calculate. So this is excess advance premium tax credit. So this we can calculate APTC, which is advance premium tax credit, advance premium tax credit minus allowed premium tax credit. Advance premium tax credit minus allowed premium tax credit. The difference we need to repay. This amount we need to repay at the time of filing the tax return. So excess APTC will be the repayment. Guys, getting this one?
Yes, sir.
Yes, sir.
Yes, right. So now again there is a problem. The problem is simple. Repayment cases. So this is $100. Okay, taxpayer may be able to pay. Taxpayer will pay. But what if the excess repayment amount is around $10,000? So let's say here 4,000 per month and 3,000 per month, and at the time of filing they need to pay 12,000. So this is per annum. So in that case, is there any problem? Definitely, which is a big problem. So why usually will people will think about the insurance, so like the health insurance at marketplace, because they are unable to pay the health insurance. So that's the reason they are taking the insurance through the marketplace. But at the time of filing, it may create a huge difference. So that's the reason we have some repayment caps. So there are some repayment caps. So okay, so happened is happened. So we cannot change. So IRS is come up with one provision, because we no need to pay the whole amount. So the maximum cap limits we have. So maximum cap limits. So the repayment cap limits we also call it as repayment caps. So many taxpayer make like honest mistakes. So this advance premium tax credit is based on estimated income. So actual income, maybe there may be change in the actual income. So majority of the people will estimate the income honestly, but there might be change in the income at the time of filing the tax return. So then the taxpayer intention was not trying to cheat, but this there may be possibility for change in the actual income. So government will protect for these cases. So let's say uh, estimated income, estimated income. So estimated income of the taxpayer, which is around $35,000, and actual income, which is around $42,000. He took the insurance, medical health insurance, based on the estimated income of $35,000 and actual income $42,000. So taxpayer was not trying to cheat here. So just that income changed. So in that case, is there any protection for large repayment? Yes. So the large repayment may create some financial hardship. So the government have some repayment cap limits. So logic here, low income, more protection, high income, less protection. So how to calculate low income and high income? So for 2025, repayment cap limits, repayment cap limits. So we'll see the cap limits. So for this, we need to see income FPL, Federal Poverty Line. So this entire premium tax rate, this entire Unit 4 Affordable Care Act is based on the poverty line. The poverty line state to state may differ, and federal poverty line also will differ. So we need to see the federal poverty line. So FPL, we also call it as FPL. So now under 200 percentage poverty line cases, the maximum repayment they are supposed to pay $375 only, they need to pay. And and under, so 200 to 200 poverty line to 299% poverty line cases, they are supposed to pay $950, and 300 to 300 to 399% of the poverty line, they are supposed to repay 1757. If there is any difference, then only the repayment will come into picture. The maximum repayment they are supposed to pay only this much. So if there is more than this, so more than this, government, will not ask any excess amount, so they can pay only to this extent is fine. And also 400% is plus, so they are high income people, so they, in that case, no limit, guys, so they need to pay the whatever the difference we have, so they are supposed to pay the total difference. This is for filing status in case of single. This is for filing status in case of single. And other filing status, so the amounts quite double to the same amounts. So other filing status. Now, guys, can you tell me, for other filing status under 200%, so how much they need to repay? Maximum repayment. Double. So which means how much they are supposed to pay? Based on this, can you tell me? Can anyone tell me? Under 200%, how much they should repay? 375 into 2, 750. And the poverty line between 200% to 219%, so it is double 1900, 1575 into 2, 3150, and 400% plus, again no limit. So let's say we'll go with some examples. The filing status is single, and the person poverty line, which is federal poverty line, taxpayer federal poverty line, which is around 210%, and advance premium tax rate, APTC, taxpayer took advance premium tax credit from the government, which is around 4,300, but eligible premium tax credit is $2,000 only. Based on the income, he was eligible for $2,000, but he took advance premium tax credit of 4,300. So what is the excess repayment? What is the formula for excess premium tax rate, guys? What is the formula? What is the formula for excess premium tax rate, guys?
Additional premium.
Advance premium tax credit minus eligible premium tax credit, which is around 4,300 minus 2,000. So which is 2,300, which will create huge impact at the time of, so this excess premium tax credit, which is we need to repay. So which we are supposed to repay at the time of filing the tax return, which will create huge impact, financial hardship at the time of filing the tax return. This is the problem, right? So for this, IRS come up with one repayment cap limit. So in this case, how much we need to repay, guys? Based on this table. Based on the table, how much we are supposed to repay?
$950.
How much?
$50.
950 you're saying, right?
Yes.
Yes. So he is supposed to repay $950 he need to pay. So 950 he need to pay. What about the balance? So balance, IRS won't care about the balance. So that amount taxpayer can keep with himself. So he must pay a maximum of 950. So 1350, no need to pay. And 950 need to repay these amounts to the IRS at the time of filing their tax return. At the time of repayment, we need to see what is the poverty line of the taxpayer. So this, if the person income falls under 200 percentage, so they are supposed to pay maximum of 375, and 200 to 299, 200 to 299, which is 950, 300 to 399, 1757, 400 plus no limit. They are supposed to pay the total amount. And also under 200 percentage, other filing start at 750. So 1900, 150. So you must remember the repayment cap limits. So this is very important in the exam. Okay, you can remember, right?
Yes, sir.
So why no repayment cap for the people who is having 400 percentage plus poverty line? Why there is no repayment cap?
They doesn't fall
Income
under
is
the
low.
poverty line.
Okay. They are not fun. They are not falling under poverty line. But that is correct only. But the people who is having more than 400 percentage of the port line, so they are high income people. So high income people, why government again need to take care about them? I mean, for these people. So that's the reason. So if the person income falls more than 400 percentage, so the government assistance will not be there. So they don't, government will not give any assistance for the people. So if they receive too much subsidy, they must repay the entire excess amount. So 400 percentage plus poverty line full repayment. So here no limit means full repayment. Full repayment. And here we have one more thing. There is one thing called Inflation Reduction Act for this 2025. So this is new provision for this topic, which is IRA. IRA, which is here IRA. So two IRAs we have. One is individual retirement account, and this IRA, which is inflation reduction account. Inflation. This is new change compared to 2024. Inflation reduction Act. So this is a change. So old rule and new rule. We will see what was the old rule, and then we will see what is the new rule. So before this IRA, before this Inflation Reduction Act, so this is household income. So we are seeing about the poverty line. So this is the household income. Household income means household income. So the total house, I mean, taxpayer and spouse total income we will consider household income. And before the IRA, before this Inflation Reduction Act, if household income exceeds 400 percentage of the poverty line, taxpayer will lose the premium tax credit eligibility. So if the person income more than 400 percentage of the poverty line, then they lost the PTC eligibility. They lost the PTC eligibility. So taxpayer, in that case, what will happen? So they are supposed to repay the total amount. So let's say there is a person. So 400% is poverty line, FPL, federal poverty line. So this is around 60,000. Let's say 400% of the poverty line, which is income is 60,000, and our taxpayer income is around 59,900. So is there any problem in this case? So will he eligible for premium tax credit or not?
Eligible.
PTC available or not, guys?
Available.
Yes.
PTC available.
Yes.
PTC available. Fine. So he can get this premium tax credit. Let's say the income is 60,100. 60,100. Now tell me, he is eligible for premium tax credit?
No.
Premium tax rate could disappear entirely. So the previous case, he was eligible for premium tax credit, but here is the case, he is not eligible for premium tax credit. So the entire premium tax credit will disappear. So just the difference of $200. So let's say here premium tax credit, he was eligible for 4,000. So just increase of $200, he will lose the entire $4,000 premium tax credit, worth of premium tax credit. So is this genuine problem? Yes. So this is a genuine problem. So now they come up with, so whenever there is a problem, definitely IRS will look into the problem and they will come up with solution. So they come up with a solution called Inflation Reduction Act solution. So this we call it as, here we call it as this cliff. We can call this as 400% cliff. Cliff means usually here this is just for increase of $200, they are supposed to lose the 400. So this is based on small change in the income. So then IRS come up with the provision, the Fed government, not IRS. So IRS will not make any acts. The Congress only will, make the acts. So here the Fed government come up with one provision called Inflation Reduction Act. So they remove this 400% cliff. So in that case, what they are checking, if the person income more than 400% also, they are eligible for premium tax credit, but not entirely. So here they will not get entire benefit. So this based on so many factors like income and their filing status and their eligibility. Based on that, previously they were eligible for, so income 59,900, they were eligible for 4,000, but here income 60,100. Based on old rule, no PTC, but based on new rule, this is old rule and new rule under Inflation Reduction Act IRA, they are eligible for not whole amount, but yeah, so they're eligible for around $3,200 around. So this calculation you no need to do. So we have the software will do the calculation. So we just need to understand the law. Based on new rule, even though the person income more than 400 percentage, but they are also eligible for the premium tax credit, but not entire amount. So the difference, so you can clearly see here, they are not getting the maximum benefit. So which is they are losing $800, premium tax credit amount. Let's say the income is 65,000. So now will they get premium tax credit of 3,200? No, again the amount will change. So let's say here 2,800. So if the person income, let's say again $80,000 here, so they may be eligible for 2,200. So who will do the calculation? We no need to do the calculation. So we have some rules. So software know everything. So based on software, the calculation will be done. Okay, so we no need to understand. So what you need to understand here, so if the income more than 400% of the poverty line, so the credit amount will reduce to the extent, right? So the reduction in premium tax credit based on the income. Okay, guys, getting this one?
Yes, sir.
So is this good changes or not? So definitely it is a good change, because just increase of $200 we have seen. So just increase of $200 income, so they are losing the entire premium tax rate of 4,000. So this is the problem. So IRS understood this problem, and Fed government come up with a provision called Inflation Reduction Act. Based on that act, even though now taxpayer can still qualify for premium tax credit even when income exceeds 400% of the poverty line. So this is expanded eligibility through the 2025 plan year. So this provision is not for people, not for tax years 2024 or 2023. So this provision is only for the IRA provision is only for 2025 onwards. 2025 onwards. Then for them it will be applicable. Okay. So here we need to understand one big important problem. The problem is, who is paying the subsidy, guys? Who is paying this amount? So government is giving the amounts to the people, to public, to the taxpayer, to comes under the insurance. So insurance was the problem previously, we have seen, right? So now the government need to give the amounts, subsidies to the people. And the problem here is there may be surplus, there may be short of the funds, right? So for that the government again come up with one additional taxes. So to replace this funds. So they are supposed to pay the funds to the taxpayer. For that they need to replace by implementing some additional taxes. So then they come up with some additional taxes. So based on imposing additional taxes, then they can fund this medical policy. This is Affordable Care Act. So to fund this, they come up with two additional taxes. One additional taxes we have already seen. Anyone remember? We clearly discussed this point. So at the time of Unit 4, anyone remember? Anyone have at least remember what was the additional taxes in Unit 4? We have seen. Form number 8960. No one remember? Seriously. Do you remember NIIT? Anyone of you have remember this NIIT, Net Investment Income Tax, which is 3.8% on investment incomes. We have seen calculations as well. Lower of investment income or excess over MAGI. Guys, this is very important exam. You must understand and you must practice as much as you can. So then only you can remember for long period. So additional taxes. So here we have a concept called additional taxes. The government need to pay these amounts to the people who are eligible. For that, they are paying from their pocket. So they are supposed to collect the taxes again from the people who is having high income. So high income people are indirectly contributing towards this Affordable Care Act. So the first one, NIIT, which we have already seen, and second one, additional Medicare taxes. Additional Medicare taxes. So by imposing these two additional taxes, the government can fund towards this Affordable Care Act. So here 0.9 percentage. So anyone at least remember what is the Medicare taxes percentage in case of FICA taxes?
1.45.
1.45 of the employee portion, right? And employer also should contribute 1.45 percentage. Now this additional Medicare taxes. So this is employee here and here employer. Now additional Medicare taxes. So this is Medicare taxes. So additional Medicare tax, AMTC, additional Medicare taxes. So here only employee need to pay. Only employee need to pay. So employer will not contribute towards the AMT, additional Medicare taxes. AMT, additional Medicare tax. Right? So employer will not contribute. Only employee is supposed to pay 0.9% of the additional Medicare taxes. Okay? Getting these points?
Yes, sir.
Yes, right. And now why PTC created? Why premium tax credit?
To help people to take health insurance.
Yes. So because everyone should comfortably afford their health insurance. So without health insurance, so there may be great medical risk and higher healthcare cost. So that's the reason the government come up with solution called premium tax credit. So which is Affordable Care Act. So in this, by giving premium tax credit, so government will pay part of your insurance premiums, and which is a refundable credit, guys. So which is which is credit. So again, we will see at the name of credits, but for now, just remember, this is a premium tax rate is a refundable credit. And also, what are the two ways to receive the premium tax credit? Anyone remember what are the two ways to receive this credit? What are the two options? Option 1,
Claim at an year end by filing tax after filing tax return.
yeah. So you mean to say claim PTC on tax return. So we know we will not take any assistance on monthly basis from the government. So we will claim the premium tax rate on the tax return directly. So option 2,
Advance premium tax credit, like
yeah,
month
advance
claim
premium tax credit. So this advance premium tax credit will be based on
estimated income.
estimated income. So here is the problem. In case of estimated, there may be change in actual income. In that case, we have the repayment cap limits. So these are the two ways we have seen. And why does the credit depends on the income? Why?
If the person is earning more income, like he can take care of health and everything. This is
Yeah.
for unaffordable people.
Okay. And here again, one more very, very, very important point. So the people must take the insurance through the marketplace. So must take the insurance only through the marketplace health insurance. The wordings are very important in the exam. So the people who are taking insurance, okay, they can take the insurance to get this benefit. They must purchase the insurance from the marketplace health insurance. So if taxpayer, like let's say taxpayer, there are a couple of taxpayer. One taxpayer, he is comes under employer coverage. So one taxpayer comes under employer coverage, and one another taxpayer purchased from insurance company directly. Purchased from insurance company directly, and another person purchased marketplace health insurance. Out of these, who are eligible for this credit?
Marketplace insurance.
Whoever buys the insurance from the marketplace health insurance, so they are eligible for the premium tax credit. So government want one centralized system. So the centralized system, so from other people, the government may not have centralized information. So health insurance at marketplace, where the government operates the website itself, which is a government based website. So they can verify the income, they can check the eligibility, they can track the insurance plans, and they can administrate the subsidies easily. So that's the reason. So this is centralized insurance place. So they can easily track the insurance. So that's the reason people, whoever buys the insurance, so they want to get the premium tax rate benefit, they must buy only through health insurance at marketplace. So here we have different forms. So the form is 1095A. So 1095A, when we buy insurance, after the year, we will get a form from the insurance, which is 1095A. And also we have some more forms, 1095B and C, 1095B and 1095C. So 1095B and 1095C are for employees. So 1095B, large employer will give this insurance to the employees. In that case, they will give 1095B document. And small employers will give this insurance, and in that case, they will give 1095C document to the employees. Now if the person is having 1095A document. So will he eligible for health insurance marketplace? Yes. If the person is having 1095B, which means employer sponsored health insurance. So can he get this benefit? Because to get this premium tax rate, the person should buy the insurance from marketplace. This is the form which is 1095A. So this 1095A, you can see Department of Treasury Internal Service. So this handles directly from IRS itself. So now, if you can see this form, so three things here. Monthly enrollment premiums. So whatever the taxpayer enrolled for the insurance plan, so this is the monthly premium enrollment premium amount. And second one, monthly second lowest cost silver plan. So this is SLCSP, and this is monthly advance payment of premium tax credit. This is monthly. So anyone know alternative name for this monthly advance payment of premium tax credit? Alternative name we have seen. Advance premium tax credit. So let's say here taxpayer okay, so this again this premium tax credit, this form 1095A, to get the premium tax credit, taxpayer should have 1095A document. And so we no need to attach this because IRS have this again the same form, because the marketplace health insurance who handles, again IRS handles, so they have the information. We no need to attach the form, but we need to include the form in the tax return for reconciliation purpose. And also yeah, so next one, eligibility requirement for this plan. So eligibility requirement, yes, Sam. Yeah,
Yeah,
you
so
having
I
any
had this like question. Yeah, about this cliff part. So basically, when you are saying that 400%, if above the federal poverty line, it is 400%. So they need to pay. There's no limit to repayment. They need to repay the full amount that they're getting. So
correct,
and then there's a cliff part also, that if the amount is rising above certain limit, so they will be cliff at that part also, right? Matlab ki if the income is increasing by certain part, they are losing their credit benefit. So even after expanding this benefit, expanding the outreach of PTC.
Understood. So let's go with some example. So let's say there is a person who is having 410% poverty line, federal poverty line. And this doesn't mean the taxpayer will not get any premium tax credit, right? So based on IRA, based on Income Inflation Reduction Act, so they can also get some premium tax credit benefit. So previously, before IRA, no premium tax rate. So in this case, they can get, but small extent only. You can definitely will see the difference. So let's say after IRA, let's say the person income poverty line income, which is 410%, and he took advance premium tax rate of around advance he took around 5,000, but actually he is eligible premium tax credit is around 3,400. So this is eligible amount. Eligible, this is advance premium tax rate. So before IRA, no eligibility. So he must pay the whatever he took, whatever the reimbursement, advance premium tax amount. So he need to pay the entire amount. But after IRA, so he is having some eligibility, little bit eligibility. So now we have to see the difference. So 5,000 minus 3,400, 1,600 is the excess premium tax credit. So whenever we are having excess, we need to see excess cases. We need to see the repayment cap. Excess repayment is subject to cap limits. Subject to cap limits. So anyone remember what are the cap limits for excess repayment in case of, let's say the filing status is single. So single cases, what are the filing repayment caps? Under
375, 950.
Under 200, how much
200,
percentage? 375. So
375.
200 to 299, 950.
$950.
And
$950.
300 to 399,
$1575.
$1575.
1575. And 400 and above, no cap limit.
No limit.
So in this case, whatever the excess amount we have, so just pay the excess amount. So pay the 1600 here. Making sense?
Yes.
So before IRA, Inflation Reduction Act, so they are not eligible. So they have to pay the total 5,000. That was the problem before 2005. So again, they come up with IRA, and 2005 onwards, so they no need to worry. Even though the person poverty line amount is more than 400%, but they can eligible based on the income and based on the family, household. So many things, factors we have for premium tax credit. Based on that, they need to pay. Okay, this is clear, I guess. Sam?
Okay. Yes. Makes sense.
Yeah. Now eligible requirements for the health insurance. So all people may not be eligible. We have seen this eligibility is very important in the exam. So they may test so many questions, not so many. At least you can expect 1 to 2 questions on eligibility category and repayment. So very important for the exam. Repayments are repayment cap limits you must understand and you must remember. So these repayment caps are very important. And another important, eligibility criteria, eligibility requirements. Eligibility requirement. So who are eligible for this premium tax rate? So first eligibility we have already seen. Who are eligible, guys?
Under
I have a
200.
Like everyone,
1085A. I have 1085B. So am I eligible for health insurance at marketplace? I took
No.
some private insurance.
No.
Am I eligible for this health insurance for this premium tax rate? No. So people, whoever purchases, they must purchase through the marketplace. Because why only in the marketplace they need to buy? Must purchase through the marketplace. So then only they are eligible for the premium tax credit. So why only marketplace? We know the reason. Anyone remember the reason?
Government provides.
The government
Yeah, the
wants to
government
regulate the
handles.
data. Right?
Yeah, the government handles directly. The IRS handles directly. So whatever the information, so whatever they require, like subsidy, everything makes easy. So when government is giving subsidy, so private parties, it may not probable channels. I mean proper channels. So government channels, yes, definitely they can subsidize the amount and they have clear accounts. So which is kind of transparency. So we can see in case of market, if the government itself handles this plan. So that's the reason we must purchase the insurance through the marketplace. So in that case, what is the document we will get after the year from the marketplace? We will get a document called 1095.
A.
Yeah, 1095A, marketplace health insurance. If you are preparing a tax return, practically when we will include 1095A document in the tax return. 1095B and C we will not include because those are not required. So, and second most important point, which is the person must be a US citizen. US citizen or legal resident. Anyone remember who is the resident? We have seen in the unit 2, resident and non-resident, right? So the person should be US citizen or resident. So resident, we have seen conditions. So if the person is resident, then only he will be eligible for marketplace health insurance. So who is resident?
Resides in US for 183 days.
Sorry? SPT test, we have seen SPT. Yeah, okay. So after the session, you can just refer. And also cannot have other government coverage. So the people, whoever wants to get this benefit, so they cannot have other government coverages. So what are the government coverages. So there are a couple of coverages, which is the first one, which is Medicare, and second one, Medicaid, and also we have TRICARE. So these are the government coverages. If the person is having Medicare, so will he eligible for the premium tax rate? Answer, no. So if the person is having Medicaid, so will he eligible for the premium tax rate? No. If the person is having TRICARE, so will he eligible for the premium tax rate? No. Why? So reason, we have a logic here. So logic here is Medicare generally in the USA, if the person, we also have seen this criteria in case of FICA taxes. Anyone remember the link of the FICA taxes? FICA taxes, why to pay FICA taxes? FICA tax includes two components. One component is Social Security, another component
Medicare.
Medicare. So Medicare taxes, why to pay Medicare taxes? 1.45% they are supposed to pay. Why? After 65, the government will take care of them. So here, Medicare means people, whoever is more than 65 or more, government will take care of them for health insurance. So if the person is having Medicare, then they are not eligible for health insurance at marketplace. So that's the reason we need to see logically. So after 65, we already have paid some amount previously, so now government will take care for your health insurance, and you cannot get this health insurance at marketplace benefit. So it is premium tax benefit you cannot get because you comes under Medicare. Okay, so this is government benefit plan. And Medicaid, so Medicaid is for people who ever having low income individuals and families. So low income people, they cannot get this benefit. So intention, we need to see the intention of this premium tax credit is for the people who is having mid-level income. So low income people, government will take care based on Medicaid. So who usually will struggle in any country? Middle income people only will struggle, because low income people, not in all the countries, but yeah, in the USA this is the problem. So for low income people, government will take care based on these Medicaid facilities. But mid-sized income people, mid-level income people, no one will take care. The government will take care for their insurance based on the health insurance at marketplace. So Medicaid for low income people. If you see a person is having low income, so which is less than 100% of the poverty line. So we already have seen the less than 100% of the poverty line, they are not eligible for health insurance at marketplace because of the Medicaid. Okay, that's making sense, this point?
Yes, sir.
Yes.
Yes. Now TRICARE. TRICARE is for military related health coverage, which is for military related health insurance. So again, which is the government policy. So to get this TRICARE, the person should be active duty military member, and also military retirees or any eligible spouse or eligible dependents also will get this TRICARE. So who serves the US Army, so they will comes under TRICARE. So in this case, they are not again eligible for health insurance marketplace. So this is third one, cannot have other government coverage, then they are eligible for this health insurance at marketplace. The fourth requirement, which is cannot have affordable employer coverage. So here Congress intention for premium tax credit is simple. So who lacks affordable coverage? So not just that. So the ACA is not for people who is having high income, who is having low income. Mid-level income people only this ACA will be applicable. And also, let's say employer is already providing some coverage, but the coverage is not sufficient. So in that case, even though they are having health insurance from the employer, but the coverage which is not sufficient. In that case also, government come up with provisions which are who lack affordable coverage, then they also eligible for this Affordable Care Act, and they can also get some credit. So again, couple of other points also we have. So those we will see in the next session, guys. So we'll try to cover this topic in the next session. Okay, so at least 3 points you remember, right? You can understand, right? So must purchase through marketplace, cannot must be US citizen, cannot have other coverages, they are eligible, and few more points we have. So 3 more points. So we will discuss those points in the next session. And repayment cap limits you must remember based on the filing status, and yeah, repayment cap is very important, and 400% cliff IRA. So which Inflation Reduction Act. So this is new provision for 2025. So we must understand whenever there is new provision, then you must understand the provision. In the exam, there are possibility for you can expect questions on the new areas. Okay. If you have any questions, then let me know. If you don't have any question, then we can wind up for today.
So just out of curiosity, so anybody who has purchased an insurance on his own, like I'm a salaried person, I want an insurance, health insurance for myself, and so I will not be eligible for PTC of any kind. Like,
Okay, so you mean to say
hello.
if the person is having any insurance, other insurance, so whether he is eligible for premium tax credit or not, that is what you are asking, right?
Yeah, he's buying on his own. Yeah, he's buying on his
Yeah.
own, not employer covered, not anything.
So if the person, this premium tax credit is only for the person who buys the health insurance and who don't have other government insurance coverage. And few more conditions we have. Once we are done with other conditions, then you will have clear idea.
Okay, so if we are also having through marketplace and also we are buying on personal, like we have two insurance
Yeah,
policies, so that
I'm
I'm
coming to
asking.
that. Yeah. So I understood your question. So we will cover that in the tomorrow session.
Okay, sure. Thank you.
Any other questions? Yeah.
Sir, here Medicare can't have other government coverage in the sense Medicare. Let's say if a person is an employee and he is taking the marketplace health insurance, already he will be paying the Medicare taxes, right? In that case, the employee can't claim the marketplace health insurance, right?
You mean to say Medicaid, right? Medicaid.
Yeah, no. Medicare. The person is an employee. If a person is an employee, he is already paying Medicare taxes.
Okay.
And then he is taking the marketplace insurance.
Okay. But age is 65, right?
No, if the age is below 65 and he is still paying the
But
taxes and
below
he's
65, no Medicare, only
employee.
Medicaid.
Oh, okay.
Yeah.
Okay.
Any other questions, guys?
Hi Jay, Vasudha here.
Yeah, Vasta.
I wanted to discuss you one thing. Could you please stay back for a moment after
Sure.
the call?
We will. I will call you.
Oh, okay, fine.
Yeah.
Thank
Others,
you.
guys? No questions?
No, sir.
No.
No question.
Okay. Okay, then we'll see in the next session tomorrow. So we'll probably try to complete this unit 14 tomorrow. Then we will cover capital gains. Okay. Okay, then we'll see you in the next session. Have a nice day.
Thank you, sir.